of profit. Analysis of profit basically comprises of your capital profits or profits which are earned prior to the date of acquisition. Then you have total profits or the closing profits, right, which you are given is 80,000. Where did I get this number? I get this number from the balance sheet. Capital profits basically, as we had understood in the concept phase, is the profit earned by the company up to the date of acquisition. In this case, we are lucky that the date of acquisition is 1/10/2011 and they have told us that 30,000 is the profit on the date of acquisition, which means that the capital profits are 30,000, right? And the revenue profits will be how much then? Revenue profits are the profits earned between the date of acquisition and the closing date. So obviously it's 80,000 minus 30,000 or 50,000, right? Now out of these profits, there are two people who are participating. One is H Limited, which holds 70% of the company, and the other is the minority, which owns 30% of the company, right? Now since I own 70%, so obviously out of the total profits, 70% belongs to me. So 30,000 into 70% gives you 21,000, and this will give you 30% into 30%, 9,000. 50,000 into 70% gives you 35,000. 50,000 into 30% gives you 15,000. This is capital profits. This is revenue profits. Now let's see how we deal with each of these numbers. H Limited has a capital profit of 21,000. Now capital profit, as we had understood in the concept stage, is a little different from revenue profit. Capital profit basically goes to the cost of control. Capital profit 21,000. Why? Because actually on the date when I acquired the investment, I paid 1 lakh. In return, what did I get? I got share capital of 70,000. I got capital profit of 21,000, which means the total value I received by virtue of this investment was 91,000. But I'll come back to this a little later. Let's do for the minority, 59,000 and 15,000 are the profits. So I can just add these profits to the minority plus revenue profits plus capital profits. This was 9,000. This is 15,000. Right? 9,000 capital, 15,000 revenue. And 35,000 is the revenue profits which the company has earned after acquisition by H Limited. These profits, being revenue in nature, are taken to the balance sheet plus revenue profits of S Limited, 35,000. Just do a total of these, 135. Right? 100 minus 91 gives you 9,000. So what will this be? Cost of control can either be goodwill or capital reserve. If you pay more, which means your investment is more and what you receive is less, then we assume that whatever we have paid is paid towards goodwill. For the minority, the total will be 30 plus 15, 45 plus 9, 54,000. We'll take these two numbers to the balance sheet. So minority interest, 54,000, goodwill 9,000. Right? Can we do the total, please? And see if the balance sheet is tallying. This will give us 629. And this will also give us 240, 440, 540, 575, 629. Right? So basically, if we just step back a little and think, what were we doing? We were given these two balance sheets. Okay, we knew H is the parent, S is the subsidiary. We are given the closing profit and we are given the profit as on the date of investment. So what we need to do here is we just need to bifurcate these profits. We need to carry out an analysis of profit, right? Between pre-acquisition and post-acquisition. Both the pre-acquisition profits belong to the parent and the minority. Even these belong to the parent and the minority. For minority, we do nothing but just add these to the minority interest. For parent, whatever are the capital profits earned prior to the date of acquisition, they are to be reduced from investment amount in cost of control. Why? Because we need to compute our goodwill or capital reserve. Whatever are the post profit, we just take them and add them to the consolidated profit and loss account in the balance sheet. Right? I hope you would have understood this video. In case there are certain points which need clarification, you can just drop in a remark at the bottom of this question. You can also visit our website www.iedubook.com in case you are watching this video at some other place, where we have consolidated all our efforts at one place for CA final students. If you like this video, please hit the like button. You can also share this with your friends at Facebook and let them also avail the benefit of these lectures. With this, I'm closing out on this particular chapter. Thank you for being with us today. This is Arinjay Jain, your educator for this video. Look forward to having you in many more of our lectures post this one, where we'll be covering more topics relating to consolidated financial statements in the coming lecture. Thank you very much.